Hey everyone, welcome to my Bitcoin and AI channel. In this video, we'll talk about the 7 rules of Bitcoin. 7 practical rules that I wish I knew when I started with Bitcoin. These rules would have saved me stress and boosted my confidence. We'll cover everything from security to strategy, so grab a notepad and let's dive into the rules that could transform your Bitcoin journey. So, the first rule of Bitcoin, self-custody with cold storage. This is all about taking control of your Bitcoin and keeping it safe offline. Imagine your Bitcoin as cash in a personal vault, not a bank account someone else manages. For beginners, this means using a hardware wallet like a ledger or Trezor, which looks like a USB drive but stores your coins securely offline. It's a game changer because it protects you from hacks that hit online exchanges, with 2025 reports from Chainalysis showing $2 billion in crypto crime. Next, never share your private keys. Those are your digital passwords. Scammers often pose as support to trick you, but if you give them out, your Bitcoin's gone for good. Think of it like handing over your house keys to a stranger. Finally, store your wallet in a safe spot, like a fireproof box at home, shielding it from theft or disasters. Skeptics might worry this sounds complicated, but it's simpler than managing a bank account once set up. Plus, it gives you full control, not some third party. The Bitcoin community on X keeps hammering home, not your keys, not your crypto, and it's true. Self-custody cuts out middlemen like banks or exchanges vulnerable to failures like Mt. Gox in 2014. Cold storage, keeping it offline, adds an extra layer, making it nearly impossible for hackers to touch. This rule is your foundation for security. So start small with a wallet, learn the ropes, and you'll see why it's worth it. Next, we'll cover backing up your setup to never lose access. Stay tuned, and let's keep building your Bitcoin knowledge. Rule 2 is regular backups, your safety net for Bitcoin. This rule ensures you never lose access to your funds, even if your device fails. Picture your seed phrase as the master key to your Bitcoin vault. Those 12 to 24 words generated when you set up a wallet are your recovery lifeline. For beginners, write them down on paper or engrave them on metal to resist water or fire damage. Never store them digitally where hackers can strike. In 2025, with crypto adoption up 15%, losing a seed phrase is a top regret. Don't let it be you. Next, keep backups in separate secure spots, like a home safe or with a trusted family member, or a safe deposit box so a single disaster doesn't wipe you out. Think of it like duplicating house keys, but for your digital wealth. Finally, test your backup occasionally. Plug in your hardware wallet, restore it with the seed phrase on a new device to confirm it works. Skeptics might think this is overkill, but it's a simple step that saved users during the 2019 Binance hack scare when cold storage backups proved their worth. The Bitcoin community often shares horror stories of lost drives, reinforcing why this matters. This rule pairs with self-custody. Without backups, offline storage is useless if you can't recover. It's not about paranoia, it's about peace of mind. Start by setting up your wallet, jotting down that seed phrase, and stashing it safely today. Rule 3. Avoid centralized exchanges. This is all about keeping your Bitcoin safe from third-party risks. Think of exchanges like Coinbase or River as a shopping mall where you buy Bitcoin, not a bank, to leave it in. For beginners, the key is to move your Bitcoin to a personal wallet, like a Trezor. Why? Exchanges are juicy targets for hackers, with Chainalysis reporting $2 billion in crypto crime in 2025 alone, including high-profile breaches. Keeping your coins there is like leaving cash in a store overnight. It is, in my opinion, risky business. Skeptics might argue exchanges are convenient, but convenience costs security. Your funds aren't truly yours until you control them. Finally, treat exchanges as a pit stop. Buy, transfer out, and store offline once you have accumulated, let's say, 0.1 Bitcoin. You know the Bitcoin mantra, not your keys, not your crypto, drives this home. Exchanges hold your keys, not you. This rule builds on self-custody. If you leave Bitcoin on an exchange, you're at their mercy during outages or insolvency. For beginners, start by buying $10, $50, and $100 worth, and later in the month, transferring it to your wallet and feeling that control. Skeptics might worry about complexity, but it's as easy as moving money to a savings account once you set up. This step slashes your risk profile dramatically. Rule 4 is use two-factor authentication, or 2FA, your extra shield for Bitcoin security. This step adds a second layer to your login, making it tougher for hackers to break in. For beginners, start by enabling 2FA with an app like Google Authenticator on your phone. It generates a unique code you enter alongside your password. It's like needing a key and a PIN to enter your house, doubling the safety. 2FA is a must, and exchanges reporting fewer breaches when it's active. Next, level up with a hardware key like a tracer. It's a small device you plug in, offering top-tier protection against phishing. Skeptics might think passwords are enough, but 2FA stopped 99% of automated attacks per Google's 2023 data. Proof it works. Finally, update your 2FA if you lose your phone. Most apps let you recover via backup codes or email, so keep those safe. This rule pairs with self-custody. Securing your wallet is great, but 2FA guards your account access. The Bitcoin community pushes this hard, with posts like 2FA or bust trending. For beginners, set it up today on your wallet or exchange account. It takes 5 minutes and could save your stash. Rule 5. Start small. This is perfect for beginners who feel overwhelmed by Bitcoin's price, which hit $100,000 in 2025. Start with $10 to $50, enough to learn, but not enough to sweat a dip. Think of it like testing a new game with free credits before buying in. Use a simple platform like Coinbase or River, which let you buy Bitcoin with a few taps, avoiding the complexity of advanced exchanges. You can check out my course. I demo how to set up and buy Bitcoin on Coinbase and River. The link is in the description. In 2025, the block reports 30% of new users start this way, proving it's a solid entry point. Next, track your small purchase. Watch how it moves with market trends, like the 10% swings last month. It's a classroom without the tuition. Skeptics might say Bitcoin's too volatile, but starting small lets you see its potential, up 15% annually over a decade without risking your rent money. The Bitcoin community loves this approach, with posts like "Start with a coffee's worth," encouraging low-stakes entry. For beginners, set a goal, buy $20 this week, transfer it, and watch it grow or dip. It builds confidence and counters the "it's a scam" narrative with real experience. You'll learn price action, wallet use, and why people pay how DL, all without pressure. Skeptics, give it a month. If it's not for you, walk away with little loss. I personally saw a $5,000 profit in a single month. Rule 6 is hodl for the future, holding Bitcoin long-term to save for what's ahead. It's about patience, not panic. For beginners, resist selling during dips. Bitcoin dropped 30% in early 2024, but rebounded 200% by year-end, proving its resilience. Think of it like planting a tree. It grows over time. View Bitcoin as digital gold, not a day trading toy. The Bitcoin Standard calls it sound money, up 15% annually over a decade. Next, plan for 5 to 10 years. Its scarcity, 21 million coins, and adoption, 30% user growth in 2025, suggest big potential. Skeptics might say it's too risky, but gold's value also fluctuates, yet it's a trusted store. Bitcoin's just the 21st century version. This rule ties to starting small. That $10 investment could grow if you hold, not flip. The Bitcoin community on X is obsessed with Hanauer hodl, with posts like Diamond Hands celebrating long-termers who weathered the crash of 2022, saw the boom of 2024. For beginners, set a goal, Hold that first purchase for a month or two and watch the trend. Think of it this way. Inflation eroded 7% of dollar value in 2024. Bitcoin's fixed supply fights that. It's not about getting rich quick. It's about saving for a future where central banks might falter. Pair this with self-custody to keep your hodl safe offline. Start now, and in a decade, you might thank yourself. Rule 7. Test transactions first. Ensures you're ready before diving into bigger Bitcoin moves. This is a practical safety check, like test driving a car before a long trip. In 2025, Chainalysis reported $500 million lost to user errors, like wrong addresses, making this step vital. Next, check the transaction on a blockchain explorer like blockchain.com or memepool.com. See it confirmed in 10 to 30 minutes, proving your Bitcoin secure. It's like tracking a package to ensure delivery. Finally, fix any mistakes, say a typo in the address, before sending more. You might think it's extra work, but it saved users from irreversible losses, a core Bitcoin trait. For beginners, do this today. Send $2, watch it clear, and you'll gain confidence. A $1 test avoids a $1,000 mistake, especially with 10% price swings. Pair it with self-custody. Test your offline wallet to ensure you control the keys. It's a low-stakes way to learn Bitcoin's flow, transactions, fees, and security. Once you nail this, you're set for bigger plays. That's it for our 7 rules. Master these, and you're on your way to Bitcoin success. Drop your thoughts below, subscribe for more, and let's keep exploring this digital frontier.